Good morning and welcome to the ASX200 show, episode 2. Before we get into the market for the last month, we just want to touch a base on stops. Many people ask us about the application of stops. And if you read really any book about traders and trading, such as Market Wizards or Street Smarts, you'll see that every trader 100% applies stops. Now, on the other hand, you have investors such as Warren Buffett who claim that they don't apply price stops, but what they call operational or management stops. However, remember that only this year, Warren Buffett lost $4 billion in one day on one single investment. So for me, the fact is, I'm not a genius management analyst. I'm not Warren Buffett, nor do I have a team of the best and brightest analysts in the world working for me. I'm just me. And for that reason, I personally generally always apply stops, except for the buts, which I'll talk about a bit later. However, going back to Buffett, there is another reason why I always apply stops. Analysts often get it wrong. And here are two stocks that I'm going to talk about. When having the debate of whether one should or shouldn't apply stops, I always talk about these two. So AMP. Now, AMP listed when I was a stockbroker back in 1998. On its first day, it hit a high of $36. It listed at $36 and actually had a high of $45. Now, what's important to understand here is that it was institutions who were buying the stock above $36 and in fact was still buying the next day around the $22 mark. Yet if we look at the chart here, we can see that AMP has now been on what is effectively a 21-year downtrend. This is despite virtually 20 years of buy recommendations by allegedly the top end of town analysts. And only recently, which I just personally find almost hilarious, only recently I read another recommendation of a buy at $1.80 by one of the large institutions. So without stops, one would have been obliterated in AMP. And I can tell you now, there are still people who got in at around $20 who are holding. So another stock that I talk about constantly when discussing the matter is Blue Sky. So the code is BLA. Now I have to point out that I didn't ever own this stock. However, I was in Queensland doing my masters when this stock was all the rage on the East Coast. Institutions were saying that they had revolutionized the alternative funds management industry, that Blue Sky management could find value and opportunities where others couldn't. And there was this, there was that. In short, BLA was the greatest thing since sliced bread. Now, the stock hit a high somewhere around here, hit a high of about $14.80 in November 2017. And one of my friends asked for my opinion when he took up a placement at $11.50. So I'm pretty sure he got in he took a placement somewhere around here. Literally, it was, that's right, yes, in March. And this was at the advice of his advisor, who will remain nameless, although a quick Google search will give you a fair idea. Now, I told him at the time, make sure you place stops. It doesn't really matter how big the company is, always place stops. And as you can see, just look at the chart. And remember, the chart never lies. It doesn't know or care who you are or what anyone or the market says or thinks. The chart always tells the truth. And once again, you can see that without using a stop, you would have literally lost your entire investment. Because in May this year, and you now get the fact that there isn't any data, hold on. So in May this year, the stock was suspended from trading on the ASX I think the final price of 18 cents. So personally, I doubt if it will ever come back on. So you had people who basically in 14 months took a placement at $11.50 who now are totally wiped out. So they took the placement here and say within 14 months, totally wiped out. And this is what happens if you don't use stops. And I'm not saying that at sometimes, even here, that it wouldn't have been brutal and difficult to take. But I tell you what, getting out at $5.70 would have been a hell of a lot better than getting out at 18 cents or nothing. So if you're ever going to get into any stock, always remember AMP and BLA. Now, we come to the but. And I said before, there is always a but. So now I have two stocks that I have never sold and I only add to. One is Wesfarmers and the other is BHP. Now, once again, I have to stress that this comes back to your personal investment goals and your perspective. Now, I consider these two stocks, Wesfarmers and BHP, as strategic positions for my children. So basically, I'm taking a strategic stake with a 20-year plus time frame. And when one looks at the world growth and development, as well as food consumption, it's only going to increase. More people are going to require housing, infrastructure, and food. So, for instance, one reason why pork and rice has gone up so dramatically over the last 10 years is because the average person in China now consumes 2 rice meals a day as opposed to 1. And Wesfarmers and BHP basically benefit and have a direct connection to both world consumption and from world economic growth. And just a quick note on that one. Another stock I have started to add last year in that portfolio is BPT. However, I do stress that having said all that, for any stock that is 5 years or less trading positions, I will always put in a stop. So finally, people will want to ask, what are your trading rules? So I have 3 trading rules that generally I never change from. Number 1, always set your stop up before you go into the position, before you've taken a position, before real money is at risk. That is when you should set your stop loss. If you try and do it in real time or after you've taken a position, it simply will not work. And basically, thousands of years of human evolution will fight you, as psychologically applying stops goes against the grain of your very survival instinct. Number 2, never lower a stop. It will be the hardest thing to do, but if you are trading or investing in a stock for less than a 5-year period, always use stops. Finally, number 3, disciplined application of stops. And in some ways, this is almost the most important stop once you've made that decision. You can't put them on sometimes and not others. It's kind of like traffic lights. You can't sometimes stop at a red light. You have to always stop at the red lights. If you're going to make a decision to use stops, you must always use them. On a personal note, once my entry and exit brokerage costs are covered, I like to then immediately move my stop up to that level. That way, I've totally covered my investment position. Therefore, from that point on, I will never lose on that individual position. To me, the number 1 rule of investing is to protect your investment. So let's look at a real world example. So I got in on Friday, August the 2nd at, I think it was $13.16. Just hold on 1 second. So let me change the scale. So I got in, where are we? So I got in here at $13.16. I had a start at $13.15, $13.16. I'll just draw the trend line that I used. The start line. So actually at the close of that day, it went to $13.31. So I was pretty pleased with myself. And then bang, our good friend, the President of the United States, Mr. Trump, clearly got up on the wrong side of the bed over the weekend, and he tweeted about reimposing tariffs on China. Now, I personally, as I mentioned before, I like very tight stops. So my stop was at 1308. Thereabouts. Just hold on 1 second. So I had a stop there. And I didn't even, so my 13 was 1308. I was hit the next trading day, literally on Monday the 5th, and out straight away. And so I stress the rule. It's the disciplined application of stops. And in fact, I didn't even get a chance to lift my stops to cover my brokerage costs. So please understand, I like Brambles, and I've reset my start at 13.15, 13.16. I have no qualms in getting back in again. But if you have, at this stage, you need to apply stops consistently and religiously. So if you have any more questions, please feel free to email me at Protrader, and we're always happy to help you and discuss the matter with you. Now, having covered stops, let's move on to the market. So July was actually a good month for the market. The ASX200 was up 1.4%. The ASX200 was up 2.5%. So it was a very good month. Unfortunately, and we can see using this chart, we had a pretty steep pullback since the 30th. The All Ords hit 6,920 on the 30th, and has now come back. It's had a bit of a, it's gone back up, but to this point, it's come back around 6.4%. However, we can see that this has been a universal issue. If we look at the Dow lost around 1,800 points from the 31st of July. And also Hong Kong. I'm just going to go through my watch lists here, and I always encourage you to use watch lists. So if we look at Hong Kong, you can see that also started actually a bit earlier, and that had a total pullback of around 3,600 from the end of July. So there are two key themes. There has been massive deterioration in the US-China trade negotiations, which all intent and purposes is now, and there's no way of avoiding this, is now a full-blown trade war. It's also very important to understand that we are now starting to see some very serious, tangible consequences of Trump's tariffs, with recent trade data being the worst in recorded history, i.e. over the last 17 years. It started in 2002, being publicly released. And also you're seeing the impact on Germany as well, and Europe, with some of their trade data, possibly Europe now teetering on recession. The other major issue that hit the market, and we can see here this very clearly, hit the market on the 14th, I believe it was. Yes, this date here, on the 14th, and that was a 3% drop on the Dow in one day. It was over 800 points, and that was to do with the inverse yield curve. Now, you may be asking, what is an inverse yield curve? So an inverse yield curve is when the money you receive on a 2-year bond, which is kind of like an institutional loan, is greater than a 10-year bond. Now, naturally, you would expect to get more or a greater return on a longer term bond, because basically you're taking more risk. So why is this important? And this is where the market is very interesting. The reason is perception. So the theory or the narrative goes that basically every recession post-World War II has been preceded by an inverse yield curve. So it's like a canary in the mine. What is hilarious in some ways is that it's actually fundamentally not true. For instance, an inverse yield event occurred in 1966 and in 1998. And on both occasions, a recession didn't follow. Unfortunately, with the stock market, perception is reality. And here we are, with our market 400 points lower than July on what was basically a misconcept. However, as Sun Tzu said, there is always opportunity where there is fear, and we had a great run with the gold stocks. And I'm just going to pull up, I did that last month, I'm just going to pull up our gold watch list. So with the uncertainty and fear that came with the US-China trade war, we saw a continued flight to safety. And in a direct inverse move that saw international markets fall, the gold price absolutely ploughed through this 1500 barrier. And once again, we touched on the gold price at the last month, and you can see, so it's now, so it's a 1600, it's a 6-year high. It's now going towards that 1600 level, and with the problems that came from the US-China trade deterioration, as well as the yield curve, the market absolutely just, the gold price just went straight ahead. And as we said, it had a flow-on effect to the gold stocks. So looking at the previous months, the stocks that we were specifically talking about were primarily New Start. Let's put New Start. So that was at $11.75. We also talked about New Crest, which I think was $32.11 thereabouts. And EVN was another one that we discussed, and EVN was at $4.42, somewhere down here, thereabouts. And SAR, and finally St Barbara Mines. So you can see with SAR that had a very, very a good run for a while, and then St Barbara Mines actually cleared the gap, or filled the gap. So I didn't get into all of these, and but they've all had great. So you can see here with St Barbara Mines. So let's go back a bit. That we were talking about here, this price point, and so it actually cleared this. It kissed on this $4 mark. It literally just touched it, filled the gap, and then has since pulled back. But look, they've all had good rallies and have had a pull. The two stocks I entered had trailing stops. So although I didn't get the full rally, I did make a profit. So the first one was Northern Star. Now with NST, the created a start 11.75, and I got in on the 15th. Now in a situation like this, when it's gapping up, I often will like to create a new start when at the gap up level. So for instance, a new stop. So I created a stop here. I then created as it moved, this then became my stop the next day. And I finally ended up getting out on the 25th, just one second. I got it on the 25th here. And so basically, this became my stop here on the 19th. And it then to say just got hit, basically virtually at the open on the 25th. So now the other stock, the old gold stock that I traded, and look, you could have traded several of them. Once again, as I've mentioned before, you've only got so much money, and so I only, basically got into two of the gold stocks. So with New Crest NCM, I got in on the 15th. I actually had set my start for 32.11 on the 11th, and I didn't touch there. I then broke above on the 19th and actually came back down. And I was quite impressed. If you look at the 19th, it actually it kissed the $32 level and then rallied up, and I thought that was quite a strong sign. So I picked it up on the 18th. Now, and this is quite interesting here. So I set as it went up, I set a stop here at this level here. If you see, basically, it had tried a few days, 1, 2, 3, 4, effectively 4 days in a row to kind of break this $34 mark, and it couldn't. It was a point of resistance. So once it did, that then became my stop level. And you can see here it came within a few cents of touching it on the 1st of August. Now it didn't, so I held my stop. But unfortunately, I was then taken out on the 12th of August here. So I ended up getting out at the 37.32 mark, and once again I followed the same pattern here where it had a bit of resistance here. I then made my stop here, and yeah, it was hit on the 12th. Now, another stock that I mentioned last month that I did get into was Brambles, and I've already touched on that. How I got in on the 2nd, and literally the next trading day I was stopped out immediately. Another stock that I was stopped out of was Sonic. Now, and you can see here with Sonic, once again I got in on the 2nd, and I was out on the 5th, and I basically took a small loss on that one. So at the moment, as I go through the ASX, and once again, I'm going to go down to my watch list here. I'm going to go through the ASX 20 stocks. So there aren't too many that I'm particularly keen on at the moment. If you look at ANZ, BHP from a trading point of view, Brambles, I am, and I say I've got in, got out. I've now created another start there for at $13.16. Now, please note that it doesn't mean that when it hits that mark, I'm not going to guarantee to buy it, but I will be having a very good look, and I will then make a decision about taking a position. Another stock that looks pretty good in the ASX 20 is CSL. The problem that I have, and this just comes down to your own personal portfolio and capacity, is I simply don't have the resources to allocate to a $230 plus stock. So even though CSL I think looks awesome, I think that just looks fantastic there, it's just not a stock that I'm going to be getting into. But another stock that I do think looks interesting at the moment is QBE. That's getting, I do like this level here at the $12.27. So I'm $12.28. I'm very interested in QBE. I will probably pull that trigger possibly this week. I'll have a look. Now with QBE, I would very likely set my stop at around the $11.83 mark. 1181, 1183. I feel that's been a bit of, previously there's been some resistance at that level, and I think this, if it goes through that, it then may come back further, and so that would be, if I get in, that'll be where I'll be setting my stop. Another stock in the ASX 20 that I think looks really interesting is Westpac, and this has come up in a few of my scans, and look, it's really starting to. You can see here, it's starting to consolidate, and I thought it was certainly worth taking a look at. Unfortunately, we then had on the 5th of August, we had what I call the Trump effect, which dramatically impacted the market, and so at this stage, it doesn't mean that I'm very interested in this, and I think it's interesting here that you can see there's almost this channel. Just one second, so you can almost see this channel here that's going on, and so I have now created a stop at $28.86. So once again, once it kisses that level, I'll be certainly very interested to possibly taking a position. Another stock that looks very good in the ASX is Woolworths. I don't have any reasons why I wouldn't buy it. It is a retail exposed to the retail sector, but it does look very good. I don't deny it, and so I will be probably making that decision actually this week. It does look very good, Woolworths. So before we now go through specific scans, I just want to touch base again on the indexes. So, and I cycle through those every day. Now I'm just going to turn on the moving average here. So we can see with the index we talked about, quite a few of them, apart from the gold, just absolutely broke through the 50 and the 100-day moving average. And I think it was the resource, just 1 second, so we can see here with the financials, the ASX200. And so the gold, it came back to the 50-day moving average, but has certainly held on to some of its recent gains, and the ASX200. But you can see here with the resources, that was particularly hit the hardest. And I'll come back in a second, but it just plowed through the 50 and the 100-day moving average. And this is because the resource sector and the materials sector are so exposed to China, and by proxy, the US-China trade negotiations. But and once again, how I use indices and indexes in order to make an investment decision. So you can see here with the materials that broke through, and then the resources. So, and once again, I earlier mentioned my long-term accumulation investment decisions. And so I actually last week picked up some BHP. The resource sector hit the 200-day moving average, and also the materials section, which broke through the 50 and the 100-day. And BHP touched on its 200-day moving average last week. So, but look, at the end of the day, I feel that BHP, it's a long-term play from my perspective. And I think this US-China trade issue will pass. So I'm happy to accumulate more BHP at the level of touching the 200-day moving average. Now, please note, I'm not saying that this is it's not going to go any lower. I just think I'm very comfortable picking some up. And it's not a trade. It is an accumulation of my long-term position. So now for the scans. As I mentioned last time, I do 4 scans a month. So I do the Franks, and I also do from the Turu's Toolbox. I also do SAM scans. So from the 2 Guru scans, the 4 stocks that I have found of interest, just 1 second, is BWP. I think looks very interesting. And I also, once again, I mentioned it before, BXB, Brambles. So I've already, as I say, I've already set my start at $13.16. And the other 2 that came up both between Franks and Sam's that I personally found very interesting. I'll just go into Sam's one here. Sorry, 1 second. Was TCL came up. And we discussed that last month. I haven't got in, but I will certainly I'm very interested. As mentioned before, it's just box after box after box. I probably will be having my start around the 15.58 mark. I say it's below that at the moment, and I think it's interesting that it came back to the 50-day moving average. But look, I would say I like to use this scan to kind of set my start. So I say for me, 15.58 is a very interesting level. And the other one, as I've also picked up just through going through the ASX20, is Westpac. Now, using my own stocks, my own scans, the ones that I have come up with, once again, I talk about Brambles. TCL has come up in my own scan, as well as Westpac. So 3 others that are of interest. Dow looks very good down at EDI. So I do like this stock. This has come up. I think it's going to fill this gap. It did try here, and then unfortunately, say we had the Trump effect, and I think it's going to re-challenge that and fill that gap. I also like LLC, even though it's in it's in this construction space. I just think this chart looks really good, and I think you'll see. So I've got I've missed the start, but I'll have a look at that probably today. But I think you'll see that will start, challenging that 1750 and trying to fill that gap. And finally, I've been in and got out, been stopped out. But Sonic Health, I think, looks really good as well. So they're the 6 stocks that I'll be focusing on this month. Now, there is a great deal of uncertainty in the market at the moment, especially with geopolitical perspectives. So I expect to see a fair degree of volatility moving forward. And on top of these stocks, I'm not ruling out, I'm not forgetting the gold stocks. I've played them once, and I'll be looking for opportunity to reposition myself in the gold stocks moving forward. Thank you very much, and I will speak to you next month.